In the Season 3 premiere of Rick and Morty, Rick Sanchez single-handedly destroys a multi-planetary empire without firing a single shot.
Awesome! Are you going to set all their nukes to target each other?
Or reprogram their
He
military portals to
infiltrates the Galactic Federation's central banking mainframe, accesses the core currency database, and alters the value of their digital fiat currency, the Blemflark, from 1 to 0. In a fraction of a second, an entire civilization built on digital wealth and post-scarcity abstraction collapses into physical anarchy. The alien bureaucrats literally begin fighting over the clothes on their backs to establish a new barter system. It is a brilliant piece of science fiction, but as the first quarter of 2026, it is no longer fiction. It is a precise mechanical blueprint of exactly what is happening to the global economy right now. Wall Street is currently experiencing a violent, historic paradigm shift known as the bits to atoms rotation. For the last decade, under zero interest rate policies, we believed that digital software, bits, was the ultimate asset. But the artificial intelligence revolution has violently collided with physical reality. The market has realized that a digital ledger, an AI algorithm, or a fiat currency has a fundamental value of 0 if you do not have the physical electricity, the cooling systems, and the raw copper required to run the servers. The digital illusion is breaking, and institutional trillions are aggressively fleeing the software matrix to hoard physical atoms. Here is the exact macroeconomic math behind the collapse.
It's the 3 lines of math that separates my life as a man from my life as an unfeeling ghost.
Awesome possum.
To understand the rotation, we must first look at the macroeconomic trap. In March 2026, the Federal Reserve signaled a hawkish hold, locking interest rates between 3.5 and 3.75%. Inflation remains sticky at 2.7%, heavily driven by global energy shocks and supply chain fracturing. The cost of capital is incredibly expensive. In this high-rate environment, the giants of the technology industry are engaged in an existential arms race to build the infrastructure for agentic artificial intelligence. To do this, they are projected to spend up to $680 billion in capital expenditures in 2026 alone. They are rapidly transforming from high-profit asset-light software companies into heavy industry construction firms. The depreciation on these physical assets is triggering a historic margin crush. But building the physical infrastructure for AI requires one critical element: copper. A standard data center requires roughly 5,000 to 15,000 tons of copper. But next-generation AI hyperscale facilities equipped with gigawatt-scale power distribution and advanced liquid cooling racks require vastly more. If you read the financial headlines, you likely saw a terrifying statistic. Widespread media reports claimed that a single 1 gigawatt AI data center would require 500,000 tons of copper. That single number caused mass panic and drove copper prices past $10,000 a ton. But here's the verified ground truth. The number was a massive typographical error traced back to an early technical brief. When you calculate the actual physics of a 54-volt DC power distribution system,
Carry the 3, add a 2. I got it.
it requires about 200 kilograms of copper busbar per megawatt. Multiply that out, and a 1 gigawatt facility requires 200 metric tons of copper. The original report confused pounds for tons, and the media ran with it without checking the math.
Yeah, sometimes I gotta do a little editing, Morty.
But do not let the correction fool you. This crisis is absolutely real. Even at 200 tons per gigawatt, the sheer scale of the AI build-out, combined with the collapse in global mine supply growth, has pushed the global refined copper market into a 330,000 metric ton deficit for 2026. JP Morgan projects copper will hit 12,500 per ton by the second quarter. The technology sector is literally running out of the wire required to plug in its digital utopia. This brings us back to the Galactic Federation. When Rick drops the value of the Blemflark to 0, the digital economy evaporates. The citizens do not experience hyperinflation, where money just slowly loses purchasing power. They experience a flat zeroing, a violent realization that their digital wealth was a hallucination. When the hallucination ends, the only thing that matters are tangible physical assets.
Yes, sir. What should I pay them with?
Their payment is the honor they'll feel to serve their... Wait, who's paying me to yell at this guy?
I can answer that. For money.
The 2026 stock market is executing the exact same realization. Investors are looking at the $680 billion AI infrastructure bill and realizing that software margins are going to collapse under the weight of physical reality. So, smart institutional capital is executing the bits to atoms rotation. They are selling the digital software, and they are hoarding the physical pants.
I used to wear blue pants.
This rotation was dramatically accelerated by the US government with the passage of the One Big Beautiful Bill Act, or OBBBA. This legislation fundamentally reshaped the American economy. It threw massive tax incentives at domestic manufacturing while strictly penalizing the use of foreign, specifically Chinese, components in energy supply chains. If a company wants clean energy tax credits to power its AI data centers, it has to source its physical materials domestically or from allied nations. This has created an absolute scramble for hard assets. It is exactly why spot uranium breached $100 a pound as companies rushed to secure nuclear baseline power. Adding to this physical supply chain chaos is the collapse of executive tariff strategies. In February 2026, the Supreme Court struck down the universal tariffs implemented under IEEPA. The courts ordered massive refunds to importers, but Customs and Border Protection lacks the IT infrastructure to process the refunds. Billions of dollars of corporate liquidity are currently trapped in administrative limbo. Companies can no longer rely on frictionless global trade. They must build physical resilience. They must stockpile atoms. The macroeconomy of 2026 is exceptionally hostile to the uninitiated. The simultaneous convergence of sticky stagflation, massive AI infrastructure costs, OBBBA supply chain restrictions, and inelastic commodity deficits has rendered the traditional digital playbook entirely obsolete. Rick and Morty showed us the fragility of an empire built entirely on a digital ledger. When systemic shocks occur, whether it's a cynical scientist hacking a mainframe or an electrical grid failing to power a gigawatt data center, the economy ruthlessly reverts to its physical baseline. You cannot eat code. You cannot run a server without copper. You cannot power the future without physical energy. Like and subscribe to our channel, and come check us out at popmacro.com. Join the newsletter and stay up to date with all of our most recent videos and research.
You think it's cool being the smartest man on Earth, but once we give you this technology, you become the smartest thing in every conceivable universe.
The Pop Macro protocol provides macroeconomic telemetry for educational and entertainment purposes only. This is not financial advice, and we are not financial advisors. And this briefing is not a directive to buy or sell any security.
Willem Dafoe!
Navigate
That's the
your
guy I
own
couldn't
risk
think
and
of
stay
this morning.
tactical. Thanks for watching.
Nurse.